Meta Platforms Incorporated, the parent of Facebook, Instagram and WhatsApp Messenger, announced the first major job cuts in the company's 18-year history on Wednesday morning, firing 11,000 employees as CEO Mark Zuckerberg blamed his own overly optimistic outlook for growth. The cut, roughly 13% of the workforce, will be the largest this year by sheer numbers in the tech sector, which has had several rounds of mass firings at big employers as tech companies, after prospering during the pandemic, experienced slower growth and faced major cutbacks. Key takeaways: Meta announced that the first major job cuts in the company's 18-year history, cutting 11,000 jobs. Meta shares were up more than 7% at $11.25 MEST in the wake of the announcement. Meta has been hurt by a slowdown in advertising spending. The cuts came after CEO Mark Zuckerberg poured billions of dollars in developing the metaverse rather than focusing on the company's core social networking businesses. The Meta job cuts are the latest sign of pain in the tech sector, coming after Twitter Incorporated and Snap Incorporated announced layoffs. Investor calls for 20% job cuts at Meta. Many Meta shareholders have raised concern about Zuckerberg's decision to pour billions into developing the metaverse rather than focusing on its core businesses. Last month, Meta investor Brad Gerstner, founder and CEO of Altimeter Capital, wrote in an open letter to Zuckerberg that the company needs to reduce headcount by at least 20% and cut annual capital expenditures by $5 billion from $30 billion. Zuckerberg said in a letter to employees that his overestimates of the company's prospects had led to overstaffing. He also acknowledged shifting resources to a smaller number of high-priority growth areas, including the metaverse. "Unfortunately, this did not play out the way I expected," he wrote. "I got this wrong, and I take responsibility for that." Meta stock rose about 4% in pre-market trading on Wednesday after Meta announced the layoffs and was up more than 7% as of 11:25 a.m. EDT. The stock has fallen 70% on the year on concern about the company's spending and weak earnings. It fell to its lowest since 2016 last Thursday, wiping out more than $89 billion of market value, after reporting a drop in revenue in the second quarter. Meta faces growing competition from TikTok. The company's focus on growth and expansion into new areas came amid rising borrowing costs, a global economic slowdown and a drop in digital advertising, the source of most of its revenue. Meta also has faced growing competition from social media giant TikTok. The Meta job cuts are just the latest sign of pain in the tech sector, coming after Elon Musk, Twitter Incorporated's new CEO, fired almost half of the company's workforce.